If you think investing in the stock market is confusing, risky, or only for people with a lot of money, that's exactly why you need this video. Because getting started is much simpler than most people think. In the next few minutes, I'll show you the easiest beginner path to start investing without overcomplicating it. And I'll also show you the mistake that keeps most people broke for years. Investing in the stock market simply means putting your money into businesses so your money can grow over time. You are not trying to get rich next week. You are not trying to outsmart Wall Street. You are trying to build wealth slowly by being consistent. That's it. Most beginners fail because they make investing look harder than it is. Here's what you actually need to start. Some money to invest, a brokerage account, a simple investment choice, and patience. That's the whole game. Not 25 stock picks, not some genius strategy, not daily trading. If your plan depends on being clever, your plan is probably trash. For beginners, simple wins. Step one is opening a brokerage account. A brokerage account is just the account you use to buy investments. Think of it like a bank account for investing. You deposit money, then you use that money to buy stocks, ETFs, or index funds. If you already invest through a 401k, good. But if you want to start on your own, this is usually your first move. And don't get stuck for weeks comparing every platform on earth. Pick a solid one, open the account, and move on. Action beats overthinking. Next is knowing what to buy. This is where beginners freeze. They think they need to find the next Apple, Nvidia, or Tesla. No, you don't. For most beginners, the easiest place to start is with a broad index fund, or ETF. Because instead of buying one company, you're buying a large group of companies all at once. That gives you diversification. And diversification matters because one bad stock won't destroy your plan. Here's the simplest way to think about it. Buying one stock is a bet. Buying a broad fund is a system. Beginners need systems, not excitement. Excitement is what gets people wrecked. Next is deciding how much to invest. This is another place where people stall. They think, if I can only invest a little, what's the point? That mindset is garbage. The point is to build the habit, because the stock market rewards consistency more than drama. If you can invest a set amount every month, even a small amount, you are building momentum. And momentum matters more than waiting around until you feel ready. Most people don't have a money problem at the start. They have an action problem. Now automate it. This is one of the smartest things you can do. Set up automatic investing on a schedule. Weekly or monthly is fine. Automation removes emotion. You stop asking, should I invest now or wait? You just follow the plan. And a boring plan that happens every month beats an exciting plan that never happens. Now let's hit the biggest beginner mistakes. 1, waiting for the perfect time. There is no perfect time. 2, chasing hot stocks. That's how beginners turn investing into gambling. 3, panic selling when the market drops. Markets go down sometimes, that's normal. 4, making things too complicated. Complicated feels smart. Simple usually works better. Here's the brutal truth. Most people stay out of the market too long because they're scared of making a mistake. And that mistake costs them more than starting small ever would. So here's the beginner game plan. Open a brokerage account. Start with a broad index fund or ETF. Invest consistently. Automate it. Ignore the noise. Simple, not flashy, but effective. If you're serious about starting, comment "starting now." And if you want, my next video can cover how to choose your first index fund step by step.